welcome to Umbrella Saturday. My name is Ayola Biami, the host, and on this call today, we have someone very important, Abaz Ibekwe, who will be coming to take us on how to take our ideas from just idea stage to investments, and then to, making our startups impactful. Like you all know, on Umbrella Saturday, basically, we help founders connect to investors. We also try to pass knowledge, impact knowledge to founders, and from there, we have speakers who come take founders through several segments. So I would not introduce Abbas any further because he will come do us the honors of speaking about himself. But Abbas is co-founder and founder of and CEO of TechField. We both have projects we run together. And very soon, founders will be seeing what we call the Capital School come to life, which is an initiative of TechField and Umbrella. And then I'm sure Abbas will just speak through his journey, around investment, and then tell us a few things that they do at TechField. Abbas, over to you. Hi, Abbas, are you there? Yeah, great. Good to have you, Abbas.
Good morning, everybody. Good afternoon, good evening. Are you able to hear me? I need to be sure my audio is clear.
Perfectly clear.
Thank you. Good morning, Ayola. Good morning, everybody that is here. It's actually a pleasure to be here with all of us. My name is Abaz Ibekwe. I am a venture builder. My journey into venture building actually started when I started building startups. So over the past few years, I have been the IJ guy working on a couple of stuff. I think from my high school days, I started building a couple of stuff, and then I got into my uni days. I also built a couple of stuff as well. So one of the things I realized is the fact that most founders lack access to the right information and also the right network. And this is actually how you build up to capital. So at a point, I got into private equity and portfolio management, which I did for some times, and it was a good thing for me because I got to also learn about finance and how it also has impact in the venture world. So after that, I got into venture building. We led a few accelerators into the continent here. The defunct New Chip Accelerator. We led their entry into African markets. And then I did some stuff with Faster Capital, based off in Dubai. And yes, I also worked with Zenith Chain, building their accelerator program. So that's literally what I did before I got into, I started building TechField. Now, when I started building TechField, I noticed one thing, that there is a large divide between African founders and also the local founders on the continent, and also what happens in the global technology ecosystem or the global startup ecosystem. So we have this wide divide, and that was actually what sparked me to start building TechField. So I believe that an average African founder is, to a large extent, doesn't have most of the things he needs. Now, when we talk about resources, founders are always talking about funding. That's the first thing that comes to their mind. Oh, Silicon Valley raises a certain amount of money. Oh, this is how much was raised in Europe last year. Oh, this is how much was raised, let's say, in the Middle East. But it's not all about money. I think the right network, the right resources, and of course, the right information is one of the things we need. So there has to be a blend. So that is our core focus. So at TechField, we connect founders to unlimited global resources to help them get into new markets, get access to finances, and also get access to all of the resources they need to launch and scale their innovation. So that's a brief intro about me. I also do stuff around global trade facilitation. I host a good numbers of events. I also facilitated international investment as well. And yes, I also play in the charity side because to be very honest with you, I think venture building in Africa is still partly philanthropic, right? And that is also what people need to understand. If you're supporting founders, you need to also have it at the back of your mind that the ecosystem here is not yet matured. So it takes a lot of social impact, a lot of you understanding that this is not just about money, but it's also a blend of charity and also trying to make money. So it's more like venture building is more like a social enterprise. So that's the way I'm seeing it. So that's me in general. I want to also appreciate you, Ayula, for the privilege for me to be here. I really appreciate that. I'm also happy to talk to founders here about how they can scale their idea to impact and also to investment. Thank you. I am happy to know how this session is going to be. If there's going to be moderation, we're going to have somebody moderating and all of that. So thank you.
All right. So thanks, Abbas. The way the section goes is that you take us through your slides. If there are questions in between, the founders raise their hands. I ask questions as well from intervals based off the conversations that your slides speaks to. And then it's just a chat. It's just a chat sessions, right? But while the chat is going on, founders are also learning from the conversation. And however the conversation goes, we're happy to do that. Ideally, there's also going to be a deal room where TechField, starts to speak about its own services to founders. And then you can also get founders who are interested in your services to reach out to you. Yeah, so that's just basically how the event goes, right? So I'll just go straight into your slides so you can just take us through what you have for us. All right, Abbas, over to you. Are you ready?
Yeah, thank you so much, Ayola. So I think you're going to be doing the sliding for me.
Yes, yes. Just let me know when you want me to move.
Perfect. So I think I love the conversation already. So from idea to impact and then to investment. So this conversation is going to be on two vertical, right? So the first is actually going to be from idea to impact and then to investment. And then the second we're going to be talking about access to markets, how we can actually unlock access to markets, how we can also unlock investment, how we can also unlock networking opportunity and also, I mean, all of the resources we need, the global markets we're talking about, the global resources we're talking about. So first, we are going to go from idea and then talking about impact and then now talking about investment. Now, one thing I want us to understand is I read a story of the lady that built Life Bank. I think it's a very common or popular story in Nigerian startup ecosystem or in African startup ecosystem entirely. So a few years ago, she actually did lost someone so beloved to her, and that was just the first. And then the second was the fact that she did lost her pregnancy, right? Now, this was a moment for her. Now, for a lot of us, when things happen, what we do, we kind of cry over it, we kind of complain over it. But she realized that the reason why she lost the lovely person and also the reason why she lost the pregnancy was the fact that she was not able to get blood. She was not able to get the right Medicare. She was not able to get the right drugs or medication she needed at that time. So that when she was back after a few years, she turned what happened to her into what has become one of Africa's most successful health tech company, and that is Life Bank, right? Sorry, Blood Bank, right? Now, what does that mean for us in Africa? I'm going to go from the idea to the impact to the investment, right? Because before anybody wants to put in money into what you are doing, there has to be a connection between what you're doing. There has to be a connection between the idea, the impact itself, and also the money you're expecting from investors, or even the money you're also expecting to get from people. right? So for Africa, first thing we need to understand is the fact that our market is unique, right? What works, I think we've had this literally everywhere. What works in Africa or what works in Europe or what works in the US may not work here on our continent, right? There is these the AI frenzy. Everybody wants to build stuff around AI and all of that. Now, trust me, those things make sense. But for a market like Africa, we have to prefer simple solution to our most pressing challenges. And that has to do with some core thematic industries. And that has to do with healthcare, that has to do with finances, driving financial inclusion, and also pulling investment and creating wealth. And then that has to do with agriculture, right? Africa's agricultural market is highly untapped. It's actually a potential $1 trillion market. And then we do not really have people that are innovating here. And then we now talk about climate innovation. Then we talk about healthcare. Now, these are some of the core sectors that we can innovate on the continent, not really copycatting what we believe works in the US or what we believe works in Europe or whatever is working in the Middle East. Those things may not work. So, first thing, our idea has to have impact. And then again, the idea also has to address some of Africa's biggest challenges, which of course we all know. We know what our core challenges are on the continent. So our idea has to address most of these challenges before we now think of investment, right? Give me the next slide, please. So as a founder, right, the first question I would love to ask, or I would love you to ask yourself as a founder, is what is the market insights and what is the real problem you are solving, right? Now, I have, over my career, at least I've looked through not less than 5,000 pitch decks. This year alone, I think I've done 1,000. The core problem I always see is the fact that most founders are not able to even articulate the problem they are solving. They cannot really pinpoint this problem. They can't mention for sure, this is the core problem I am solving. So as a founder, the first thing you need to do, the first question you need to answer clearly is the problem you are solving. So this is the problem I'm solving. This is what I'm doing. This is the market, and this is the challenge, and this is the solution I am preferring as a founder. Now, the next thing is actually the timing, right? So we have a lot of persons trying to build the same thing at the same time, or we have a lot of things trying to, import the solutions that are working in Silicon Valley, bringing it back to Lagos, or bringing it back to Uganda, bringing it back to Kenya, Nairobi, or to Cairo in Egypt. I spoke about localizing our solution first to your market. So the first thing we need to do as African founders is ensuring that you know the problem you're solving, you know the market, and of course, the timing for the solution you're preferring. So another question you're going to ask yourself this morning is, the solution you're bringing right now, is this the right time for this solution? Is this the best time for you to solve this problem, right? Because most times, one of the reasons why founders or ventures are unsuccessful is the fact that the idea is brilliant, the team is top-notch, rockstar, solid guys working on the project, but then they are either too early, they are getting on the project just too early, or they are getting on the project too late. So timing is very important for a founder, right? When you are building, you need to look at, is this the right time for you to prefer the solution to this problem? So the next thing you also need, these are core questions you need to ask yourself, right? Or even if you're building something right now, and of course, what you're building is already successful because one of the things the founders are doing now is having multiple verticals. They have this product and then they are trying to launch another product, right? So before you release the next product, the question I would love you to ask yourself is, what I'm about to release, the new product now, is this the right time for me to bring up this product? Or am I supposed to wait a little bit more before I release this product? Don't get me wrong, you could get the right team, the right guys, the right product guys, the right sales guys to push this out. But if the time is not right, you're literally going to struggle more than you would have. Or let me use the word hustle, because building is actually hustle. So you are definitely going to hustle more than you would have if you've launched this in the right time, right? So now the other thing is validation, right? So you have to validate what you're doing. So sometimes we have an idea just struck on our mind, and we're like, oh, so this is the best thing to be done right now. So Africa needs this, Africa needs that. Probably because you had a chat with your friend, or it's a personal experience you had, or maybe your family members shared something with you. And you're like, oh, so wow, this is amazing. You know that eureka moment that comes, and you're like, oh, so this should be the next thing that I should build. Now, this could be an amazing stuff, but then have you validated what you're trying to build? So that's something else you need to consider, right? So you need to really take out time to validate this, because I listened to the co-founder, the founder of MoneyPoint mentioned one thing. He said, if you want to build, if you're hustling, ensure you hustle in the market that is large enough, right? He now mentioned another thing that I love. He said, if he was building Money Point and it was in an industry or in a market that is not wide enough, the potential of scaling to $1 billion company wouldn't be as much as it is right now. So when we are building as African founders, we need to pay attention to market validation. Ensure that you have tested what you want to bring into the market, and then you also have a lot of persons willing to pay for what you're bringing to the market, right? So that's another thing you need to consider. Thank you. Now, so the next is I spoke about your idea and then what expectations you should have with regards to your idea, and also what people should expect from your idea, right? So there are things people need and there are things people cannot really do without. So whenever you intend to launch a business or when you are scaling your business, you have to make sure that this is exactly what people want. This is what people cannot really do without. Ensure you are giving them a solution to a pressing challenge, right? Something they really cannot do without. So you need to ensure that your solution is that. That's what you're giving to them. Now, a good idea solves a real challenge that is also urgent, and the problem is also growing. So your idea should be solving the right challenge for them. And it also needs to be innovative enough to stand out, right? Because most times they're going to ask you, when you're pitching to VCs, one of the questions they're going to ask you is the fact that what makes this different from what others are doing? What makes you think that this is going to stand out from what you have already? What makes you feel like this is exactly what the market needs right now? So you need to ensure that what you're bringing to the market is the best fit for them. It's also timely. It's also very, very innovative at that time, right? Now, it's also flexible enough to evolve. So your idea should be flexible enough to evolve. Now, evolving means you're not only solving for, let's say if you're in Lagos or you are in Kampala in Uganda or you're in Nairobi, and then you're just solving for that market alone. I mean, it makes sense to localize or to be focused on a specific niche market, but then ensure that this can actually evolve. You can build other embedded solutions into one, right? So please give me the next slide.
Okay, before I go to the next slide, Abbas, let me just ask you this question. I hear you speak a lot about validating your ideas as a founder, and how do you validate that this was a real urgent problem worth solving? How do you validate that? Because I hear a lot of people say, oh, validate this, validate that. It's an idea. How do you validate that idea? What are the methodologies to validate the idea?
Perfect, perfect. Now, one of the ways you can actually validate your idea is the fact that this is a pressing challenge and this is what people want, right? So people need what you have. People want it. They cannot do without it. So that's exactly how you're able to validate it. So for instance, right, you get the product out, right? And then you start talking to people. And building a business is one of the when you're building, you have to be brutally honest with yourself, right? Because at the end, if you're not honest and then you're not working with the right data available with you or the right information, at the end, you're still going to pivot, which of course is not wrong, but you have to do that. But most of the time, people pivot from what they were building before. These are things they would have avoided earlier if they have taken enough time to validate what they are building. I'm going to say that again. So before you put out your product in the market, or before you feel that you've gotten the product market fit or your minimum viable product and you push it out to the market, the first thing you need to do is to talk to as many people as possible. Be brutally honest with yourself and also ask for feedback from them, right? Ask for feedback, talk to as many people as possible and expect a non-biased response from them. And when they give you the responses, work with the response. Now, most people are going to tell you, oh, so this is an amazing stuff, but then it's not timely. A couple of persons are also going to tell you, oh, this is amazing stuff, but I don't think it's going to scale. Some persons are also going to tell you, oh, so this is amazing, but are you going to be able to build this? Do you have the right team to build this, right? One set of persons I would love founders to talk to is actually venture builders and VCs. The reason is they have seen a lot of these ideas. And most times, because of the money they are going to put into your venture, they do not want to waste their money. So even before trying to raise fund, I always ask founders, talk to venture capitalists, talk to them, ask them what their idea, what they think about what you're building. Because chances are, regardless of how innovative your idea, you think your idea is, a VC has already heard of this. Someone else has already pitched this to them. So that's one thing. And then talk to your potential customers as many times as possible. I share a personal ideology that we should spend time in the early days of building, talking to our customers or our potential users than we even do, right, building the product itself. Now, most of the technical founders are guilty of this, right? So all of them are from their engineering guys, and then they know exactly how to build whatever you want them to build. They're able to build that. So they spend all of the time building everything they have in their head, everything they have on their mind. They just want to bring this perfect solution they have on their mind to the market. But the truth is, the market decides the product it wants per time, not really what you think the market wants, right? So the best way to validate your idea is to talk to the market because it is the market that you are building for. It is the market that's going to give you money. It's the market that is going to pay you. So the hustle first should be talking to as many persons as possible and also ask them also, aside from this, what else do you think you would love? If they tell you, oh, this is not the best thing I need now, or this, I don't think this is the best stuff we need, then you now ask them a very honest question. What do you think that is needed at this time in this market? I don't know if that answers your question.
All right. Yes, that's fine. That's fine. I see Ebuka's hands up. So Ebuka, you can just unmute yourself.
Hi, good morning, everybody. Good
Morning.
morning, Ayola.
Morning.
Thank you very much for this opportunity. I have two questions. So the first one is, how do you tell it's the right time? Because you've mentioned the timing. So as a founder, how do you tell it's the right time for you to introduce your product to the market? And then the second one is, where can I find a VC to have such conversations with? Because I would love to do that. Thank you.
Okay, so if I got your question right, the first is how do you know it's the right time for you to ship your product to the market? So this is simple. Before you launch, just like what I said earlier, before you launch, ensure there is a sales guy. It's very important now. Whenever somebody approaches me and talk to me about what they are trying to build and tell me, oh, this is what we're building, one of the first questions I ask is, aside the technology team, I mean your product team, do you have a rockstar salesperson? Because that's a team cannot be complete without a sales guy, right? Now I'm not talking about the whole, it sales now. We have a lot of verticals. So we talk about digital marketing, email marketing, and all of that. I'm talking about someone that understands how to sell, not just marketing. The person understands numbers, the person understands statistics and data that can get you exactly what you need. Now, that person is one of the most important persons you need in your team. Once you get the person, the role of the person is to validate the product or to validate the timing of the product. The best way to do that is to talk to as many persons as possible. It still goes back to talking to the market. Now, the second is there's what we call founders market fit. Founders market fit. I'm going to give you an instance. Most of the guys that are building pretty much amazing stuff in fintech today have actually worked in fintech before, right? The Money Point guy that has built a unicorn, he was actually working with one of the biggest remittance company on the continent. Now, that gives him a market fit. That founder's market fit is there, right? He has real-time experience in the market. Now, the guy from Flutterwave is actually a great guy, right? He built Flutterwave. It's now a unicorn. They make a lot of money. They solve real-time problem. He was in charge of digital innovation at Diamond Bank, right? That was later acquired by I think Access, right? Now, he has first-hand experience in that. So aside from talking to the market, there has to be this founder's market fit. As a founder, you need to have real-time experience in the market you're solving for, right? Ensure that at least one of the persons, you cannot come and tell me, oh, I am a fintech guy, or I'm trying to launch a global payment solution. And then I look at what you have done, I look at your experience. There hasn't been anything in your team, or let's say you have 3 co-founders, and then none of you has real-time experience in a fintech or in global payments. So that is very important because that is going to give you real-time insights. It's going to give you some unfair advantage that others do not have. It makes the whole market research easy for you. So you need that founder's market fit.
Okay.
It helps you validate the market.
All right.
Does that answer your question?
Abaz, I have a question for you, right? Are there situations or scenarios that both founders don't have, or the product never even existed, right? But these guys think it's a great or interesting idea that they go ahead to build and think that is investable. Are there situations like that? So I don't know, let's give for instance, I'm building the first Facebook, right? There was never a Facebook, maybe an African Facebook, for instance, right? And there's nothing like that, right? There is nowhere to get that experience that you're speaking about. But I think that is an interesting idea. I think that Africans will love it, and then I jump on it. Do you think that there are situations like that? Does that also put the founders at disadvantage?
Thank you for the question. That's brilliant, Ayula. So I'm going to answer this question from the perspective of an investment person, right? So in the investment world, what we literally do, I think it plays out in reality, it's literally everywhere. So our role here on earth is to ensure we put ourselves on the side of winning, right? We ensure the odds at least are to our favor. That's actually what makes us win. Now, I'm going to break that down. That is why it's easier, let's say, for a guy just coming out of Harvard to build something and then that thing grows. That is why it's easier for a guy that has gotten into an accelerator to build something and to a large extent it grows than it is for an average guy maybe building from a local village or a local or underserved ecosystem somewhere in Kanu or even somewhere in Port Harcourt or even somewhere in Delta, right? Now, what am I saying? We have as founders, our work is to ensure we give ourselves chances or we increase the odds for us to win or for the venture to win. One of the ways for us to do that is at least to innovate or to build a team that has what it takes to win, right? And that is where the founders market fit comes in. Now, I'm not going to say in entirety that you cannot just have a brilliant idea and then you build it and it works. Now, when something like that comes, the best thing to do is look for somebody that has expertise in the market. They can join you as a co-founder or they can be one of the founding team member. Another way to go through this is to get an advisor, right? So get yourself an advisor that has worked or that has years-long expertise and experience in this market, and then is willing to give you hands-on experience and mentorship on how to literally scale. I don't know if that answers your question.
All right, that's fine. I think that's fine. I don't know if there are other questions in the room. Otherwise, we can just continue the presentation, Abbas.
So I think the other question was he did ask how he can get to talk to VCs to confirm if it's one of the things that they would love or if they think the idea makes sense to them. So there are good numbers of VCs, to be very honest. One of the first things a founder should do is to get on LinkedIn. LinkedIn gives you some level of an unfair advantage, right? So my advice right now, if you're a founder, you do not have presence on LinkedIn, get on LinkedIn real quick. You can connect with any venture capital firm that you want to. And then there are also people that build a bridge between VCs and also founders. So that's where companies like Umbrella comes in, right? And also TechField Africa, that's one of the things we do. So we build that bridge. And then sometimes we look at your pitch deck. I'm sure Ayola, his company, do that. They look at your pitch deck based off the experience of had, and then they will now tell you, oh, this is a non-biased review. This is what we think. This is regardless of what you think of your idea, but this is what is honest. This is what we believe. So yeah, on LinkedIn, you can connect with VCs, and then you can also talk to ecosystem builders. And yes, you can also talk to other founders that have built something that you probably know, and then you can ask them. And then think of getting into accelerators as well, and also think of incubation program or venture studios and startup pitch competitions, right? Those things are really going to help you. I hope that answers your second question, Mr. Ebuka.
I think I have a question for you, Abbas. Before Ebuka goes, do you think speaking to your competitors as well, or well, potential competitors, maybe they're not doing exactly what you're doing, but do you think speaking to them also helps?
Yes, to a large extent, yes. So as a founder, there's actually something that, I mean, most of these things may not work in Africa, right? But there's something Elon Musk did, which was offering some of this technology. He made this technology to be open, right? When they were building Tesla. So he made that to be like what we'll call open source, right? So he made it to be open where everybody can actually see it. Now, what I did was first, it established Tesla as a leading EV company in the world. We have to take note that Tesla wasn't really the first guy that attempted to build EV. Now, they may also not be the most successful in terms of sales and everything or adoption, but of course, they have built that name in the industry. So for me, talking to your competitor is nothing bad, right? So as a founder, when you are building, you have to strip yourself of every iota of ego. Everything that looks like ego, right? Which you're going to be like, oh, so I'm building the same thing with this guy. I don't think I need to talk to him, right? Now, that is you already creating another competition for yourself. So you have to be brutally honest with yourself, talk to your competitors. But then again, you have to reserve some information as well, because some of this information may be your trade secret, right? So you do not have to let out all of the information when you're talking to them. Some of them has to be discreet, but then talking to them, learning from them makes a lot of sense. It puts you on the other side of winning. So yes, you have to talk to your competitors.
All right. Thank you, Abbas. You did well with that. Ebuka,
Yeah, I can hear you.
I thought you wanted to ask the question. I saw your mic going on.
No, he was asking if the second question I asked was correct. I wanted to confirm that.
All right, no problem.
That's all.
All
Thank you,
right.
Abbas.
Thank you. Abbas,
Yeah. Thank you. So this is quite uncommon, right? Because when you talk to an average founder, one of the first things they tell you is, "Oh, we have 1 million app download," right? So we launched our product last week, and in less than 24 hours, we had at least let's say 100,000 app download. Now, app download is actually a good metric, right? Because you can actually present that to investors, right? You can tell them, oh, so we had these numbers of app download. But then the real impact or the real metrics that can validate what you're doing is the impact you're creating, right? Now, there is this sense of fulfillment as a founder in the early stage when people reach out to you and tell you, now this may be, you could be offering, it could be a service startup or it may be a product. Now, people reach out to you and tell you, this is exactly what we needed, right?
Yeah.
We've had a product that we're trying to bring to the continent. And then I spoke to it's a B2B product. I spoke to one of the guys we work with, and he said, listen, Abaz, this is exactly what we needed. So that was like a validation for me. I don't know much about the Ivory Coast market, because the product we're launching it from there. Now, he said to me, he has access to the market, and then they have been looking for a way to get this thing done. And when I shared what we're building for them or what we're leading into that particular market, he said, this is exactly what the people here are suffering from, and they need it. So that alone goes ahead to validate it. This is the impact. That's the impact I'm talking about. So impact is the real metric. Impact is the real validation. Impact is the real validation. If you build something, let's say for health tech or in the healthcare market, and then you're able to provide a solution that helps people maybe stop some level of life-threatening diseases or whatever it is, I mean, you just get to know that you are launching something good, something impactful. So you don't really need to see the app downloads to be sure that what you're building is actually impactful, or what you're building is what people need. So the impact that you're creating in the market, for me, is actually what people want to see. When you have that impact, you already know you've gotten the metrics. So for VCs, investors are more likely to bet on solutions with tractions and clear, measurable outcomes, right? So we're still talking about going from idea to impact and then to investment. So when you are talking to a VC, I mean, in around 2020, when you talk to VCs, they'll look at your idea, and they literally used to phone pitch deck back then. So they'll look at They'll look at your pitch deck and then they are happy. And then they sign the check. It was a frenzy. Everybody were actually getting their part of funding, right? I spoke to a founder the other time that said he actually deferred fundraising then, even when they had a lot of offers. They were actually building in the health tech market. They had a lot of VCs wanting to finance them back then, but they wanted to also get a better market valuation for what they were building. But then we started fundraising for them late 2023, and then it took us a couple of years before we could even get people to commit. The same investors that were running after them around 2020 are the same investors that said to them, "Oh, you do not really have the metrics we need," right? Now, what do I mean? Investors are more currently, they're looking for traction. They're looking for real impact. They're looking for validated solutions, and not just app download, not just projections, right?
Yeah, not just ideas.
If business were built off projections, I think everybody would have built some of the greatest businesses. Everyone can literally do a good projection. So this year, this is what we're going to make, and then we are going to capture a certain portion of the market. And then by 2026, we are going to get here, and then we should be in this market, and then we should go global, right? But then it doesn't really work that way. All of those projections most times doesn't really work. What works is the traction you have now. That is how you can now project what is possible subsequently. So moving forward, investors are looking for, they want to bet on stuff that already has meaningful traction, stuff that are already working, right? And then stuff that they are sure, or solutions that they are sure that this is what you did with your own money, or without our $100,000, without our $500,000 investment. This is what you're able to do. This is the number of businesses, or this is the number of users or clients or customers you're able to save. Now that you need $100,000, there is huge chances that you can now be able to increase it. But if you tell them that we're about to launch this, and this is the market size, this is our team size, and then we are certain that if we put this out there, if you give us 100,000 or 200,000 or $1 million, this is what we're going to do. The first question would be, what have you been able to do with your own money? Or what have you been able to do without money at all? Right? So there has to be impact before investment. So impact is actually a proof that the idea works in real life, right? At TechField, we have a non-negotiable system. When a founder comes to us, we tell them, you must be solving some of the core challenges that Africa is facing. Again, I'm not against blockchain. I'm not against IoT. I'm not against metaverse. I'm not against all of those emerging technology. It makes sense. But we personally believe that sectors like agriculture, or if you want to solve in those markets, if you want to bring in emerging technology, the emerging technology really has to solve problems. It has to address core challenges in agriculture, in healthcare, right? Because these are where we are having problems. It has to address real-time problems in agriculture, in healthcare, in our educational sector, in the climate innovation side, right? So those are our core thematic focus. But if you come to us with metaverse, you come to us with blockchain solution, it makes sense. But then there has to be a connection between what you're building and what Africa is facing. Because you're building for Africa first, you're building for your local market first. Now, I'm going to give an instance. When people started building stuff around AI, I've had this thing in the SME ecosystem where we hosted the Africa SME Assembly and also worked with a couple of SME guys. And then we had a numbers of guys that came to us and said, oh, we are building for SMEs. And I asked them, what are you building? And most of them were like, oh, we are automating how these SMEs are able to manage their day-to-day operations. Now, don't get me wrong, that's an amazing idea, but is that timely enough? Now, the core challenge, as much as I know that most of the SMEs in Africa are having, they need finance. That's what they need, right? They need to be able to hire the right person. And then another thing they need is actually how to be able to grow their business. Those are some of the core things that SMEs are looking for, not necessarily automating their systems. Most SMEs don't need to automate anything. They don't need AI in most of the things they're doing, right? So now, coming back to that, most of the SMEs, most of the solutions we have, most of the solutions we have, sorry, please, most of the solutions we have on the continent, I don't think it's timely for Africa, right? We need solutions that are actually addressing the core challenges we're having. So you have to think about impact as the proof of if your idea is really going to work in real life. So investors don't just want to fund your ideas, they want to fund execution. Amazing, right? So they want to be sure that that's where the founders market fit comes in too. So they need to be sure, oh, you've got a rock solid market or a rock solid team that can actually execute. So when you talk to good numbers of founders, you really get to understand that most of them are very excellent with presentation. So they can make a very great pitch. That's also an amazing skill, right? Because if they can transit that also into sell, it makes a lot of sense. But founders should not focus on memorizing their pitch deck, memorizing their problems, and being able to articulate it and put it out to VCs during pitch challenge or during pitch sessions or when they are trying to fundraise, right? So there's a difference between having a brilliant idea, being articulated enough to pitch this idea and to sound convincing, and also being able to execute on the idea, right? So execution is actually what you need. You need to be very brutal with execution for you to even go from the idea to the impact. Now, the next is a resilient, smart, and complementary team can pivot, adapt, and grow. That's where I think I've mentioned the word founders market fit a lot of time here. We don't have to undermine this. The founders has to be rock solid. Ideally, you can have the best technology guys, but then there has to be these guys that goes out there to sell these things as if the life depends on it, or as if the life of the business depends on it. Because to be very honest, the life of every startup, the survival of every startup depends on the capacity, on their capacity to sell, their capacity to acquire customer. There are good numbers of businesses we have or startups that we have that raise funds. They got into accelerator. They are able to raise funds around 2020, 2021, right? But then they were just very good with fundraising. They were not good at sales. They could not sell what they are having. They could not attract the customers. Now, most of those startups are struggling. They're trying to do bridge rounds there and here and there to be able to keep the team afloat. There's a lot of things happening anywhere, so we don't have to get into that. But then you need a team that can actually execute, not a team that is good with strategy alone, not a team that is good with pitching alone, but a team that can go out there and execute. I'm going to tell another story. Now, one of the best marketing companies in the US, in I think the city of I think it's in Arizona, yes. So they had their worst performing branches there. The Arizona branch actually performed the worst for more than 20 years, and then they rated that branch. Now, another guy got a role, and then he felt he should be a manager. And then what the management of the company did, the board of the company did, was they asked him, can you go to the Arizona branch? He said, sure, of course he can. And then they told him, so listen, this is, if you must be a manager, this is the branch you need to go to. And this is the current situation of the branch. He said, yes, that's absolutely amazing. He can do that. So he got to the branch, and this is where it begins to make sense. Now, when he got to the branch, he noticed that this branch had good numbers of sales guys or good numbers of marketing guys. And this is a marketing company. But most of the marketing guys were seated in the office. They spend almost all of the time in the office. But then the clients they need, the customers or the buyers they need are actually out there. Now, he said when he got to the branch, he started working with them. He told them, your work is in the field, right? When they resume work, he told them to get to the field and to start working. And then the first day they came to the office, they had the 20 minutes meeting, and then he asked them to go to the field, go into the market. That was how he was able to get his team to work and to turn the worst performing branch to one of the best in the history of the company. Now, what do I mean? Your marketing team is actually one of the best assets you have to invest in, right? So you need a marketing team that can actually make sales for your business, because the survival of the business depends on that. Now, the next is, I think we're running short of time already. I'm going to be real fast. So the market we operate in, the risks and the opportunity. Amazing. So Africa has about 54 countries, I mean, we all know, and over 1.4 billion people. Of course, everybody is aware of that, but still get less than 1% of global VC funding. So this is quite unfortunate. We've had this time after time. It unfortunately hasn't changed, right? Even with the amount of funding we pull in, it hasn't still changed. We've not still gotten to 1%. And it's not only about VC funding, even funding from infrastructure, funding in real estate, we still get very, very, very little. We still get peanuts, right? So what that means is we need to do better, right? Our market is underdeveloped. We lack the infrastructure and the regulatory stability. And then people really misunderstand our market. Sometimes I talk to some of the foreign guys that wants to expand to Africa, and the way they see our market is crazy. So most of them are still thinking they are fighting because we had insecurity in Nigeria, that means it really affects the entire market. So this brings the risk perception to our market, right? And then we are undercapitalized a whole lot. I mean, a business in Nigeria, if you compare the valuation of your business in Nigeria to the same business in the US, you see that it's like 3 times more, or sometimes up to 10 times the value of the same business you're building in Nigeria to the one that is built in the US. It's more like 1:10, right? So those are some of the challenges we have, and we all know them. But then in the midst of this, in the midst of the challenge, we also have something that is an unfair advantage for us, right? I see African market currently like what the American market was before the dot-com boom. And it's been growing and having a lot of pullback and retracement, and also continues to grow. And that's the same thing that is going to happen in Africa. There's something with India, right? If you pay attention to India, you can also see how they are growing. So we need to understand the level where, right? Our market is fast growing. We have a fast growing population. We have a digital leapfrogging. So we are not moving at the scale of one. We are not moving arithmetically. We are going the geometric route. So the way African businesses, the successful ones, the way they grow is different. So instead of them doing like, let's say, the ones that are really growing, you could see some growth and metrics that are shocking. So instead of seeing businesses that did $10,000 ARR this year, and then they are doing 20 next year, they are doing 10,000 this year, and then they are now doing like 50,000. and then they are now doing something like 200,000. So that is our own advantage, because we are solving in a market that is highly populated. We are solving in a market that does not really have much of competition. So if you are able to single out yourself to grow, and you're hustling in the right market, that's the niche, the chances of you growing is so wild. That's why you have the likes of Flutterwave. Since they were able to get out there and money points, you can see how they are building different verticals of product, and then their growth is like wildfire. So that's what an advantage we have is. We also have the untapped sector, like the agri-tech, the health tech, and of course the financial service market. Now, when we complain of all the challenges we have, we should also look at what the opportunities are for us, what the unfair advantage are for us, right? Now, but then we go into the reality checks. Let me look at the reality check, please. Now we get into the reality check. Africa has okay. So that we've just gone past that. All right, we've just gone past that. So now that is the first this webinar or this session. I actually divided it into two phases. So the first phase was actually going from your idea to impact, and then finally to investment. So we've actually highlighted how you can do that and how you can actually get to fundraise. Now, how do you, when you've gone through all of these stages, how do you now unlock global opportunity for your startup?
I think before you go there, Abbas, let me ask you a few questions. When you meet up with startups, right, what signals do you look for beyond just the pitch deck?
When I do what? Come again, please. Say that again.
When you meet with founders, what signals do you look for before you start to invest in them beyond the pitch deck?
Okay. I look at the markets, right? I look at the market. So there is a Hustle Fund actually brought they brought one chart that highlights how they make investments. And then I think that resonates with me, right? The reason is, if you're hustling in a small market, your growth is limited already. So the first thing I do, aside from you as a founder, aside from your pitch deck, I look at the market you're hustling in, right? Now, hustling in the right market already gives me a perception about you, that you know you are brilliant, and then you know what you want for yourself. So if you're hustling in a very minute and small niche market, the chances of you growing is not much. So if you're hustling in a market that is large, that also checks a box for me, that you know exactly what you're doing. Now, this may not be conventional, but I look at that. Now, the second thing I'm looking at is the founder's market fit. This is like the 10th time I'm mentioning this. So I need to see if there's any correlation between what you're building and what has happened in your life, or what has happened in the lives of all of the co-founders, right? There has to be a connection. So if I see that, and then it makes sense for me, I know that you are in the right markets. What that means is, if you are empowered, you'll be able to scale real fast. The second is, you've had first-hand experience with a challenge, or you've played in the market or in the industry. So you have this unfair advantage, which can actually help you scale. So those are some of the things I look at. Sometimes I may not mention it. Sometimes I may not ask, but those are the things I want to see. And then it gives me some level of assurance that, yes, this looks like a perfect deal for me. I don't know if that answers your question.
All right, thank you, Abbas. I don't know if there are other questions from the audience, crowd. Let's have questions. If not, Abbas, I think you can also go into phase two. Are the question, guys? All right, let's have phase two. Okay, phase two. Over to you, Abbas. Sorry, I think I moved the slide faster. All right. Abbas, are you there?
Okay. Perfect. Thank
I think you're breaking in and out, Abbas.
you guys. So that every found.
I think you're breaking in and out, Abbas. I don't know if it's just me. Anyone else experiencing that? Yeah, I think he dropped off. Maybe just give him some minute. All right. I think you're back now.
Yeah, thank you. I need to be sure you can hear me.
You have a question, Abbas. Yeah, Ebuka's hand is
Yeah,
up.
go ahead.
All right, Ebuka.
All right. My question is this. Let's say, personally, we don't have, as a team, we don't have enough capital or enough money to like, do so much as to even put up the MVP because, for instance, it's an application company, right? A mobile app. We need fundings to get certain things, to get certain data. Uh, I heard there was a time we were in a meeting and I heard something about a growth partner. Someone who's ready to invest in the idea first. What do you think about such opportunities? Do you know if for anyone we could reach out to see if we could get such opportunities? Did you get me, Mr. Abbas?
I didn't get you well. I don't know if you can say that again.
I said I've heard over time I've heard something about having a growth partner. Now, growth partners are people who invest in ideas because you've mentioned that it's rare for you to get a venture capitalist who would invest in the idea. They want to see that you have done something, right, and know how much you've put into this. So, from my end, we've been able to register and maybe afford data for the project itself. But the kind of project running or we're working on is a project that requires more than just registration and data, data bundle subscription, right? We need to, get certain licenses. We need to afford certain APIs because it's an application company. So how do we afford things like this? Because basically, if we gather all our salaries, those still be enough. So how do we, afford funding or how do we access funding to be able to afford things like this? Then we
Okay,
can also
so let me quickly. Okay,
market.
are you taking that?
Yes. Okay. So I think that the route to that would be that you look for angel investors, right? Look for fundings from family and friends. Try to sell your ideas to people who believe that you are worth taking the bet, right? And you can raise them in smaller rounds, right? Oftentimes, I find out that founders want to raise 500K at once, right? And they're looking for one person to give them 500K. But there are different ways to do it. You can have 2, 3 people give you bits of the funding that you're looking for. And angels are always ready to be partners. They are more of angel investors are more of growth partners, to be very honest, to early stage founders like yourself, Ibuka. They're the ones that will take a bet with you and wait for the time when you're ripe to even raise further fundings from maybe VCs or institutional investors, right? So I think that's the approach you should look at. Look for HNIs, yeah, because sometimes when you say angel investors, founders are like, oh, they don't wear the cape on their head. So how do we see these superstars that are called angel investors? But ways to identify them are to look for people who are high network individuals who have funds, or a few rich people around you who have never invested in startups but have the fundings or are investing in, vertical markets like MSMEs or SMEs, and they are the best set of people to speak to. All right. I hope that answers the question, Ebuka. I was going to answer that. Yeah.
Thank you very much.
So look
I'll work on it.
look the directions of angel investors at the very early stage. And that's one question I was going to ask Abbas. When do you think is the right time for a startup to go to VCs? Because again, sometimes startup go very early to VCs and they get a lot of no's that dampen the spirit of entrepreneurship, right? Because when you get no, you're not the best fit, or you apply for accelerators and you're still not the best fit. Ebuka, another route to that would be even accelerators and incubators, right? You can join an incubator program. I know Metwater has one in Ghana, where they will just want you to come with your ideas, and then when you get there, they stitch your ideas together to a stage where you are even able to launch your MVP, right? And they give you a little bit of funding. They give you some capital. And there are so many other guys. Antler as well also has his own program as well. A lot of programs out there. You need to be hungry for information, all right, at this stage, because information is your resource. That's your money. The more you are able to search and query, the more you're able to change your queries, the more you're able to pivot conversations, maybe even set up Google Alerts, right? To find out which startup has raised from what angel or what individual has invested in certain companies. It gives you like an idea of who is out there that is willing to fund startups rather than just thinking of VCs. All right, Abbas.
I will.
Yeah. So I think additionally, there's something we always forget. Sometimes most founders are not aware. They call them venture studio, startup studio. It's not really gotten the right spotlight yet on the continent, but I think it's actually growing. So startup studios they ask you to come with your idea. Sometimes you don't really need to build anything. For accelerators, most accelerators or even incubator would want to see you have at least something to show. Maybe you have the team or maybe you have the technology. But some venture studio, the way venture studio was, the model for venture studio is to take you in with an idea that aligned to what you're doing. Zero commitment from you. You don't even need to have the team. Some of them even pay monthly stipend to ensure that you commit your entire time to build your vision. The only problem about venture studio is they take a lot more equity. So on average, it ranges from 25% and above, right? So think of venture studio. We have a few of them. There is it Entrepreneurship First? There's First Founder also. There is another one also. I think in Lagos we have about 4 or 5 of them.
Also Orange Corners.
Yeah, absolutely. But I think we have more of them in Kenya, and some of them are niche specific. I think that's also what we need to do more in Africa. In Nigeria, right? We don't venture studios. We need them. Although we have incubators, but I think we need more venture studios, right, in Nigeria. So think of venture studio, try applying to them, and then apply to startup competitions, right? Now, most of these guys are going to fund you, or they are going to expose you to potential angels.
Yeah.
Just like Ayula mentioned, angels are not really like angel, not like an average angel, Michael or angel Gabriel. So these guys are just guys that have money, and then they are willing to put it somewhere. And then let me also give you another secret to approach an angel investor. Look at someone you think is rich or someone you know is rich. He has expertise in your market. Approach him to be an advisor or a mentor in your business. So just tell them, hey, this is, you know exactly how to pitch them. So this is what we're building. This is the traction, but we're lacking guidance and real-time advisory on how to do this. Let's say you are building a fintech. Look for a guy that has played in the financial service, maybe as an investment manager, or let's say played in fintech or anywhere, then talk to them, tell them this is what we're building. And this aligns exactly with your expertise. We would love you to be our advisor. And this comes with a certain percentage in the company. You now outline what your expectations are, what you need them to do for you. You would need access to their network. You need a real-time advisory. You need a recommendation from them. Just list out those things. There is 50% chances that if what you're building is amazing, the advisor is going to turn out to be the guy that is going to write the first check for you. And then there's what we call network effect. Once he's an advisor, people feel this sense of, oh, I've been recognized. Yeah, I've been recognized. Are you like, I think we need to do something. Let's just plan a session or a workshop where we train core professional or executive how they can become advisors in startups, right? Best in startup, right? So that should be something we can just a normal session, a random session where we just bring these guys together talking about how they can transfer their expertise into startups. So for your question, get to talk to them, outline what your expectations are. Once they buy into the vision, they would be the one introducing you to their friends, right? So this is a guy, this is this, this is that. And before you know, you've closed your angel round. So that works like magic. So let's get going.
Okay, Abaz.
So why think global from day one?
Abaz, sorry, just a minute. I'm also going to jump back into some questions. I also find that even at angel stage, the request, the funding request or the asks sometimes are way unrealistic. For an angel investor to want to put it right, you don't want to do an angel round and you're asking for 850K pre-seed money, or you're asking for seed money, right? An angel round is an angel round. You're looking for 150K, you're looking for 100K, just something to push you up, right? Not necessarily asking for a pre-seed money. So I think that's also another mistake that we find founders make when trying to raise funds. I just thought to put it out there.
So I do agree with you. I agree with you 100%. And I've seen that most times as well. These things are unrealistic, even the seed round. Now, this is why founders has to go through what we call investment readiness, which is one of the things that we offer and you also offer. But when you talk to founders about the need for investment readiness, most times they shy away from that. They just say, oh, I'm building something amazing. People have to invest. Are you investment ready? This question has been asked so much times, but founders still shy away from that question. So they need to know how this thing works. For an angel round, do not chase away a potential angel by asking them unrealistic check sizes. Don't ask an angel for 100,000. That's still too much. Asking one person for $100,000, right? Now, something else I'm going to advise is make sure for every time you want to raise an angel round, be specific with the use of fund. I need an angel round. I want to use it for license. I need an angel round. I want to use it for my sales team. I need an angel round. I need it specifically for this purpose. It makes it make sense. And then it makes it trackable. And it makes investors to also trust you. So if you tell them I need an angel round of 150,000 or of 200,000, it's not really that simple for someone to cover that amount and give to you. You need to outline what the fund is going to be used for. But if you approach an angel and you tell them, we are seeking a license from CBN, that's for the fintech guys, or we need our marketing to go up. This is the marketing budget. It is $15,000, and that's exactly what I want to raise. It is simple for this person to know that, oh, this guy is so specific. That means they know exactly what they are doing. So we can fund their marketing. We can help them acquire the license. So these are some of the things these are the wisdom you need when you are approaching angels. Thank you. I just hope that was a good addition as well. So talking about going global, you with a global vision, you are not limited to the local network, right? So if what you're building can solve a lot of problems, then it makes sense, right? So you are going to have better capital, you are going to have a better partnership. Now, the role of partnership in startups can never be overestimated. There is no how you can talk about being in too many partnerships. If your partnership are strategic enough, that alone unlocks capital for you, right? So that's another thing you need to know. Now, partnership also gives you some level of blocks. It unlocks some level of market for you. I'll share an instance for one of our services, which is the grant writing we offer to startups. We're trying to go global, get into new markets. Then I spoke to one of my friends, and he told me, hey, Abaz, I can get you to work with Nobelum. Now, Nobelum is actually the largest network of Black entrepreneurs in Canada. And then they also operate in the entire North America, working with a lot of government agencies. Let's say we would have worked with 5, 10, 15, or 20 founders. But our partnership with Nobelum gave us access to 5,000 founders, their entire network or community of founders. So that is the role of global partnership. It gives you access to money, capital, and also access to your customers or your users or your clients. So if your vision is global, it also ensures that it gives you the right partnership. Then it also gives you the right to gives you better talent, right? So I'd love to see a team where the talent is also global, right? Please give me the next slide. Perfect. So I love this. So most Africans, when they are thinking of scaling, the first place they are thinking about is the US. So for an average African founder or setting up in the US, don't get me wrong, that's amazing. My company facilitates that. That's one of the services we offer. But going global alone isn't all about Delaware incorporation. I think the main reason why people used to do the whole Delaware incorporation was because of the funding, right? It allows for equity shares and all of that. You need that. But then do not think that you have incorporated in Delaware that you are now a global business. That solved the globalization you're talking about. It doesn't. So US is not the only international market. We should get that into our head. Beyond Silicon Valley, you can think of Europe, right? Focus the European market. If you're building something around climate innovation, they have a lot of focus on that. And then in healthcare, and then green technology, and then inclusive finance, right? So if you can get some level, if you're building around there, think of partnership there. Partnership unlocks capital, right? And then the next is the Middle East. Now, I don't know if you're paying attention to how much the Middle East guys are investing in their startup ecosystem. Pay attention to is it Hub 35? Is actually in Dubai. Pay attention to what is happening in Qatar, right? There are good numbers of startup accelerators there. Pay attention to those guys. They are driving massive partnership with African startups because they want to establish the Middle East as the global hub for innovation, specifically in AI and emerging technology, right? So don't think of Silicon Valley alone. Pay attention to these other places I'm mentioning. Middle East, that's the Gulf region, very important. Pay attention to them. There are a lot of innovative funding opportunities from there, even grants and impact finances as well. And then Asia, Singapore, India, and Indonesia, we do not really have much of relationship with this market, except it has to do with trade, right? But for innovation, not much has been done, but we're still hopeful that we will. And then Latin America, I think Brazil is starting to do some sort of exchanges with us. I think the ecosystem builders need to do more around this. There should be more of ecosystem mixers, ecosystem exchange, ecosystem synchronization, bringing this ecosystem together. Recently, I learned that Luxembourg, it's a little country, very small country. They have a lot of non-dilutive funding for African founders, but they have specific countries they focus on. I think Senegal, I think Togo, and then Benin Republic. I think about 8 of these countries. Now, if you're only focused on the US, or your focus is only I mean, US, of course, that's where African founders, they lay their entire focus what is happening in other places, right? So as an African founders from the countries I just mentioned, if you're building something amazing, these guys can actually give you a partnership funding of up to 200,000 euro to scale your business. All you need to size and then drive partnership with them, and then you're able to get this funding. Now, that's just Luxembourg. There's an agency called SDEV, Estonia Agency for International Development. They also fund startups. They have good amount of funding for startups. But then again, their focus is on Kenya, Uganda as well. Nigeria is not there. And what they do is the same thing. So they have different opportunity for different sector. Their focus is on digitization, financially. So you should own that this, right, as a channel to get funded. So we should move from isolation to collaboration. Global growth starts with global thinking. So give me the next slide, please. So there are more opportunities like that. I don't know if Umbrella is a cause. So exploring global collaboration and innovation exchange. So this is an ecosystem problem. I think we should work more on this. Ecosystem sync. We should bring different ecosystem together. Even the Kenyan with the Western Lagos meet Nairobi. So we need stuff like that to know what are the opportunities. So there should be a cross-border accelerator. Thank God for Antler. We have Antler. Antler, I think it's from the Nordic side, but they are currently in Nigeria. So if you haven't applied, go and apply. If you need assistance, we can help. There's also Seed Stars. We have 500 Global. There's Techstars. There's Brink. And also Mass Challenge. Now, the funny thing is, these are very popular names. But before now, founders were only aware of, what's this guy's name? Y Combinator and Techstars. Yeah. But there are more than 200, yes, there are more than 250 innovation programs and accelerators to only YC. That only recently the YC only took 0.6% of total applicants. So that's more. It's more difficult to get into YC now than getting into Harvard and MIT combined, right? Two of those schools, it's easy to get into them than getting into YC. But we have different alternative. There is what we call I think is it Friends and Family? We have another one in Luxembourg that are also accepting African founders. There is one called Wise, Startup Wise Guys in Portugal. We have Wise also in Qatar. We have there is also another one from I think Hub 35. Hub 35 in Qatar, sorry, in Dubai, literally runs multiple programs for African founders. So look beyond the US. Look at all the markets, right? There are more opportunities there for you. Pitch globally, right? And then the other one is bilateral trade summit. Thank God for GuyTex. If you can afford it, try to attend it. There are other events in Canada as well. There is US Africa Business Summit. We have Viva Tech in Europe. There's London Tech Week. There's UK Africa Investment Summit. There are good numbers of tech events. If you can invest in attending most of these events, it will help you. Africa Technology Expo makes sense. Attend them, but give yourself at least one global tech event.
Even to add, Abbas, is the fact that even the West African Economic Summit that just finished in Abuja was a great place for founders to be as well, because you will make a lot of connections.
Amazing. So these are some of the things that founders are not aware of. So they spend the entire 24 hours coding, building the infrastructure. These things thrive on network, and having the right network and having even the global one makes a lot of sense. I'll share another story. There is a guy building from a place called Burundi. Now Burundi is hilly. It's more like it's actually a landlocked place in Africa. We should be, most of us that has some knowledge of geography should be aware of that place. The guy building from there, we're consulting for them. And now when he told me about attending a pitch event in Germany, and then when he got back, one of the businesses that got to know about them from Germany asked them for a supply of what they are doing, and this thing ran into €1 million. You can imagine that. And this is just a startup that was making less than $1,000. But their first international order was in a tune of $1 million. That's a lot of money. And how does this happen? Just pitching, traveling, pitching. So ensure you're able to do all of this. And then startup visa programs, if you can afford this, it makes a lot of sense. The Canada has theirs. It's extremely expensive anyways. And then there is one in the UK that knows about it. Try to get that. French also has a French tech ticket. There's also the Dutch tech visa. There are startup visa, or Arabia has theirs. There is one in Qatar. And then Singapore has the Singapore Tech Pass. And I mean, most of these countries has their digital nomad visa. If you can get it, it makes sense to you. Please give me the next slide. Is that the end?
No. You still have more slides to go.
Okay, so I think our time is fast spent. So how do you really attract global VCs? It's really, really simple. Get into accelerator. That is the advice. If you can get into accelerator, there is higher chances you are going to raise fund. How accelerators work? Most of the accelerators don't fund startups. They have VCs that fund startups. So getting into accelerators gives you direct access to VCs. So ensure you have a great pitch deck and your storytelling is rockstar. Use Umbrella does that. They can help you facilitate all of that. And a clear traction, we mentioned that earlier. Let your impact be resounding. And then stay compliant with all of the regulatory policies. Delaware, C-Corp, you need that. We can help facilitate that. You need to understand SAFE, what a SAFE is. And then your data protection, your data room fix, all of that. Global benchmark and TAM. Ensure that there is some level of total addressable market that gets into the global market. So that again, give me the next slide, please.
Okay, Abbas, and I think I should slow you down a bit. Bumi has a question so that she doesn't forget that question. Okay. All right, Bumi, over to you. You can do
Hi, Abaz, thanks for the insightful presentation thus far. I'm looking forward to the rest of it. So my question is more around the ecosystems that the VCs are interested in. It sounds more like a tech thing. What other sectors do you think enjoy such an investor attraction, so to say? So it sounds more like tech. So I'm curious because I host a community of MSMEs. They are into different industries. So, I noticed that most sessions I attend is always about tech. So I just want to understand: is there others? Do they have other sectors they look into?
Okay, perfect. So, thank you so much, Bumi, for the question. So, for SMEs, one thing we need to understand is VCs has the way they fund. So this is the misconception we have. So most guys that are not startup want to raise funding from VCs, but VCs was built. VC was actually built for a kind of wildfire growth, right? So that's why when you're talking to a VC, they are looking for a business that can do it 10 times for them or 100 times for them. Because the truth is, most startups fail. So they are just looking for one investment that even if all of their investment fails, this one success can cover up for them and also makes them profit. So that's how the whole thing works. So we need to first of all understand how the VC system works or why the whole VC stuff came into play, right? VCs are looking for startups. I'm going to give a scenario. We know we have normal cars and then we also have sport cars, right? So you cannot take your, let's say your Sonata. I mean, I love Sonata. It's a great brand. Hyundai Sonata makes sense. You can't take a Sonata to go do a car racing. Can you do that? Because it cannot survive that. So that's the same way you taking your SME and you want a VC to fund it, right? So VCs are like that. They are looking for sport cars. They're looking for the likes of Ferrari, the likes of let's say Lamborghini that can run in cover thousands of kilometers. I'm just trying to use this real life scenario to explain this so we get to understand. So for SMEs, getting back to your question now, for SMEs, all you need is people that are funding SMEs, right? And I think, Mr. Ayola, this question is another validation for the capital school.
Yes,
So I think we've wasted a lot of time there. So
I can tell you,
this
I
is
can
a
tell you, the moment the question came up, I'm like, Bumi should just wait for capital school, right? So Bumi, to answer your question as well,
yeah,
there are a lot of, and that's not to say that SMEs are not in their own right doing great, to be very honest, or MSMEs are not really doing great. I've met a couple of them who have said to me, can Umbrella raise funds for us? And I'm like, you know what? There's a possibility of us trying to do that, right? But the way SMEs are, some SMEs are even way better than startups, to be very honest. In investments,
of
in
course, yeah.
investment space, a whole lot of them are way better than startups. The little gap I see with SMEs are the bookkeeping, right? Most times the books are never as organized as you would expect it to be. It's always just a struggle. And when your books are not clear, of course, VCs are never going to invest in it, right? Because it's a struggle. But if we start to see SMEs that from the foundation, which is of course a lot of knowledge and education needs to go to the SME industry as well. And I'm happy you said you're doing something within that space because we all cannot just do everything, right? If there's the understanding that startups have now that for you to run your business from the onset, you must have clear differentiations. If that understanding can also happen with SMEs and MSMEs, I can guarantee you that investors might be willing to go there as well, right? Because of course, for any investor is return on investment, right?
Yeah.
But there are institutions that provide funding for SMEs and MSMEs. There are government institutions that also provide it because, of course, MSMEs and SMEs fuel the economy as well, right? Yes, the money that comes to startup is a lot, but the truth about it is that the backbone of most economy or most governments in Africa rides on SMEs and MSMEs, right? So I'll be very sincere that we might give it a chance, maybe in some 1 year time or 2 years time. But maybe the solution to it is education, a lot of education, because that market as well is really, really lacking a lot of educational resources. And that's what Abbas was also trying to say. We're trying to fill that gap in what we call the Capital School, which is a partnership between TechField and Umbrella. And as Abbas has said on this call, partnerships are very important. Maybe maybe SMEs need to do a lot of partnerships because there are banks that are willing to fund them. They can take up the risks. I mean the financial institutions can take up those risks because of course you would have to have accounts with them. They can see how the money is moving. They can see all that, But with VC, there's really nothing, beyond what you tell them your books are, and that some financial gap.
Thank you. I look forward to the Capital School.
All right, no problem. Yeah? I know you.
Yeah, sure.
I know you've been
think I
smiling.
just
I know you've been smiling all through, but that's what it is.
absolutely. So that's another validation, right? And I think just to add something, you said the right thing. So SMEs need more education. They need to know what capital is available for them, who is actually funding them, right? And how best can they position to get funded. I believe that SMEs stand chances of raising fund even more than startups because, to be very honest, startups are only limited to VCs. And that's the truth. So as a startup, your only chances of raising fund to a large extent is actually VC, right? Or maybe grants, and then you can do a couple of others, maybe debt round. But as an SME, government are literally funding a lot of SMEs. There are programs there. And then there are other people like banks are literally funding them. We have investment companies and private equity firms that are investing in SMEs and MSMEs, right? So I think the solution right here, you get the right education about what kind of funding is available for you, and then you'll be able to go through that. So our Capital School is coming. Thank you again for that revalidation. And so about talking about why you shouldn't sleep on grants. So global grant programs to explore that. I mean, everybody here understands grants. So be you an SME or you are building a startups, right? There is grants for you, right? Good numbers of them. Keep your eyes there and search for that. Be on LinkedIn. I cannot overestimate that. Get on LinkedIn. You get a lot of information, right? There are good numbers of grants. I'll just mention a few of them. There's GSME Innovation Fund. Of course, USAID, but Trump has really dealt with that particular funding that used to come to Africa. But then they did a good stuff for us. Then Africa Development Bank Youth Entrepreneurship Facility. I mean, there are good numbers of grants. Currently, we are doing good numbers of grants for some of our portfolio companies. So there are good grants, right? There are good grants. A lot of them. There's Global Gateway from EU. It runs into billions of dollars. So it's going to run for the next 10 years. MasterCard has one of the largest endowments, MasterCard Foundation. They have one of the largest endowments, and it's specifically for African businesses. So that's a lot. So tap into that. The last one was for EdTech. The one that is currently running is for climate innovation. They have another one coming soon for creative economy. And I think another is going to come for agriculture. So that's for MasterCard alone. There's one from Develop Ventures, currently running 100,000 euros, sorry. GIZ has some good numbers of grants as well. And the EM, there's Innovate UK, they has grants as well. Most of them are not here. We know Bill and Melinda Gates Foundation grants. Good numbers of them. If there is a community, I can share ones that are running. So keep your eyes on grant. BU and SME. Yes. So let me see if we have another slide so we can get straight to questions. So yeah, final message. The window is open. The moment is now. I love Africa so much. I speak so passionate about the continent, and I believe in one thing: we are going to build Africa, not anyone else. We will. So we should stay focused. If we don't take our solutions to the world will bring their solution that don't fit us. And that's the truth. That's unfortunate, but that's the truth. Most of the solutions in Africa North African solution. The infrastructure, literally everything we're using here, from the Zoom we're using to have this conversation, the devices you're using there, maybe your mobile phone or your laptop or whatever you're using, it's on our own. These are global stuff. We didn't build them, right? So we should think of building stuff and also exporting it, right? So the next 5 years will define Africa's place in innovation economy. Startups that embrace impact, build with global alignment, and engage in network beyond borders would lead the change. So that's it's my humble summation for you. I just hope I was able to convert this thing as much as it stands in place in my heart to do. So a call to action: think global, build local, scale regional, apply to global accelerators, and this quarter, open a global investor data room, right? Use Umbrella is the best place you can do that. Explore non-dilutive capital like grants, partner beyond borders. You're looking for global partnership, we can help facilitate that. Ecosystem build. Now, this is for ecosystem builders. We have DCs here, venture builders here, operators here. Build bridges, not just platforms. Ayula, I think this is for you. So Umbrella should collaborate more. You are doing that already. I see you brought in these guys. What's their name? These bookkeeping guys, right?
Thanks.
I know them.
Thanks.
Yeah. Intent. Yeah, I love how you're bringing the global perspective into Africa, because when you talk to African founders, most of them don't keep their books accurate. Their books are not in place. So I love the fact that you let these guys understand, because when founders are talking of global capital, are you ready for the global capital, right? So I love how you are building that bridge. I'm super excited. And make Africa investable by preparing founders for global due diligence. I mean, it's actually a pleasure to have had these conversations with all of you. Thank you. My name is Abaz Ibekwe. I lead TechField. It's a pleasure.
All right.
So over to you if you have questions. Okay.
Please, let's have the questions. Let's hit Abbas with a lot of questions. If you're a founder, you've been going through a lot, you want to get clarity, this is the right time to get the clarity. Abbas is the great guy for this. We've done a couple of sessions together. We did a Code Africa investment deal room where we had a couple of founders who are currently in conversations. And Abbas, he wears many hats. TechField is just one of the hats that he wears. Let's have you, Kata. Good to have you back.
Hello, sir.
Yeah, good to have you back.
Hello, good morning.
Morning.
Good morning, sir. Okay, so let me talk from the perspective of a founder in the food and beverage section, because I noticed that more of the conversation has been around fintech and all that stuff. But here's my question. As a founder that is trying to raise most especially grants for a multi-product brand, what would be the best way to do a tailor-made? Because yes, I heard him when he was saying that when you're asking an angel investor, you should be specific. And I'll give you an instance. So we have beverages and we have complementary products like maybe peanut butter, fruit jam and the likes. And sometimes the sales are not almost at the same, they're not consistent. So sometimes this month you might be very good with beverage. Another month, maybe it's going to be the peanut butter or palm oil and all that. But when you're doing your financial analysis, they want to see the numbers, they want to see the figures. And that's what is going to motivate the angel investor, whatever investor, okay, I can invest in this brand. So my question is, in trying to tailor-made or trying to be specific as to what you want to do with the fund, how will you advise and navigate a multi-product brand to do so?
All right, Abbas, before you go, let me ask you a question, Kata. What data have you been able to look into that gives you an informed decision on why sales is low on one particular month for beverage and high on the other months on something? There must be something influencing it. I'll give you an instance. I worked at Deal Day, right, at the very early stage. And one of the things that we realized is that third week of every month, sales are really very low. Why? Because people have spent salaries, right? So first week, we're seeing a lot of boom. Last week, we're seeing a lot of boom. Some companies pay like last week, 25th. Some companies pay half salaries. There were like those patterns. And we needed to look into the data to understand why the third week wasn't really doing well. So what we did most times to push up the sales for the third week so that we can have a balance was to, put some of the deals that were very exciting, put them on the third week. So people will save money in the first week or second week because, in fact, you're teaching your users a new pattern. You're cultivating a new pattern in them, right? And that helped basically for us at Deal Day back then. So I'm asking this question because I find out that sometimes as founders, we say certain things, but we don't look into or investigate into the data and see, or even ask questions, or go out to the field to find out what exactly has caused this. So maybe you have that information you want to share. That would also be very interesting.
Okay, so let me give an instance. There's this pattern, most especially during festive seasons, maybe Christmas, Ramadan period, Valentine, and the likes, because people want to geek out. And we actually do hampers. So we do food hampers, we mix all our products and all that stuff. So if we look at the trend, those months, those are like our best period, like the peak period. So March, peak, okay, let's say February, peak period, March, April, peak period, then go into November, December, peak period. While the other months, yes, the sales are actually maybe from normal customers that have been buying from us, or maybe new customers. Another thing is that, yes, it's the financial statement that are actually influencing this, because we look at our trends through the turnover and looking at what's our pattern, another most especially is our advertising. Maybe how much are we spending in this particular period on adverts, and is it the adverts that is corresponding to why we're having this high increase in the sales? So that's the pattern I can actually mention for now. You're muted.
All right, that's fine. Abbas, I don't know if you want to take our question. I hope you're still here. I know your camera is off. Yeah.
Okay, so she mentioned something about multi-service, is it multi-product company?
Yes, multi-product.
Multi-product brand. So beverages, peanut butter, palm oil, offender rice. So we have products that are from either for your lunch, for your breakfast, or for dinner. So we are like a complete awesome brand. So if you're not interested in maybe the breakfast, maybe you don't want to buy it, so you want to buy something that you can cook for the family over the weekend. So so it's kind of like complementary. So, and if I'm not doing the analysis, sometimes it may be because of the fact that somebody wants to buy the palm oil, not say, let me buy more of your beverages. So that's why that's the reason why I'm asking the question. That, okay, in writing a grant and trying to woo an investor and say, oh, I want to tailor-made this fund for adverts, and I really want to do the monitoring because of the fact that I'm using this money for this adverts. How do a multiple brand really convince that investor, knowing fully well that the advertisement is going to cut across this product?
Okay, so I think the best way to do that first is let there be a kind of connection between all of the products. So everything you are doing falls under the food industry, right? Yeah. And then your story should be, you should get a story around what you're building, right? Whether it's a startup or not, but what I would love to see is, even if you are not really a technology business, what you can do to make it make sense, that you also stand chances of even raising from investors, raising from VCs, while you're also getting the traditional finances as well from banks. What you can do, embed a little of technology. This could be maybe having a platform where you sell this thing online first. Let's say there's a sort of e-commerce or whatever. So these now move from, you're still operating traditional, right, with all your multiple products. And then, but it has this technology side of stuff that makes it look all tush. And that's, of course, what what's it called, VCs want to hear. So you have to, I'm just trying to position you well. You have two options now. You can go the traditional route of fundraising from banks and also grant, while you can also talk to VCs. Now, for when you now want to raise funds for a specific product, now you can now pinpoint that product, get the data, just like Ayula mentioned, get the data for that particular product and how people are also responding to the product. and what the potential is for that product, and then use that to woo the investor or to talk to the investor to convince him, or use that to talk to the grant donor, right, to make a convincing grant proposal so you'll be able to raise one. First, look for a sort of connection between all of the products in the brand. All of them, connect all of them together. I love the fact that everything is around the food sector, the food tech market. Make it tech savvy, put a little bit of technology, right? And then if you're now looking for a brand or a product specific grant or funding or finance, segment all of them again for this particular product. This has been the growth. We believe that if we get this finance, we can be able to do this. This is what we've done earlier, selling all of them together. But pinpointing this, scaling it on its own, we can be able to do this. I don't know if that answers your question.
I think to add to it, Abbas, would be that there's what we call product bundling. You can either bundle or unbundle it, right? You can bundle it as a package, a wholesome package, and say that we want to start moving this into bundling. And when we start to move it into bundling, we have the potential of getting X and Y. But as individual products, this is what the results we've seen. And we see certain growth potential in one that is not currently doing well, but we need finances for advertising, right? So if we're sure that if we're able to advertise X, we introduced it in the market, is doing X%. If we're able to get some funds to push some adverts around it, we are sure that we can push the sales up by X. I think that's also another approach to it. There's never a right or wrong answer to how to approach this. You just need to keep trying, to be very honest, Kata. I hope that answers the question.
Thank you so much. Thank you very much.
All right, Bumi, you have a question.
Yes, I have a question again. So my question is around getting advisors. So we are building a solution currently, and I had to put a hold to it, like, let's stop and think through this again. So I heard when you mentioned something about if you do not have expertise around whatever you're building, you should seek advice, get an advisor or a co-founder. How do you advise we go about this? Because the worry is, who do you approach? If there was an organization that said this, we cater for this, I think that's why I requested for Karen's number, so Karen's contact. So how do you advise we go about this?
All right.
I'm a bit confused on how to get an advisor, someone that can show you what to do, the right way to go about it. Yes, the idea is yours. You're able to build, but the best approach.
Okay. Before Abbas goes, right, I'll give you a personal experience because I've applied this advisory to Umbrella and I've seen it work. And I'll tell you my approach. What I did was to study the industry, right? Again, you need to know how to sieve within the noise. There are a lot of noisemakers in the industry as well. So you want to sieve through the noise. It's not about who is being mentioned on papers or in the news or in the media regularly. You have to go look for who has, so I had a list of maybe potential 100 people, right? I don't think it was up to 100, but let's say potential 20 people. And each of these guys, I admired their work. I went to their company, I saw what they were doing, I saw the growth pattern, I looked through the stuff, I asked questions around, especially when they have events, I go to those events, I try and listen to them, try to hear what they were saying, try to understand that they are aligned. Now, I'd not spoken to them. I just wanted to find an alignment between, in fact, I wanted to find if I had some spark listening to them speak, right? Or listening to them talk. Then I looked for people who were within my circle. If I didn't have anybody in my circle, I would look for one person that was connected to them that I would connect to and ask, oh, what do you think about this person? Oh, please, can you tell me about this person? With LinkedIn, sometimes you even have recommendations, right? Some people would have given them recommendations. You can read through the recommendations to see if this person is a potential fit. Now, beyond being a fit for your business, the person has to be a fit for your ideas as well, right? Because your business is one entity. It can come in, it can have all the skill sets, all the networking and the rest. But when it comes to ideas, you guys might clash. You might have an idea to do something, and your advisor thinks that you're not creative enough. You know, you don't want to start hearing those, oh, yeah, this idea, I don't think the idea is not creative enough. You want someone who supports your ideas or take those ideas and build off on it. So what I did was to do that. Identify all these guys, then I started to send them. I first connected with them, which of course Abaz has said, LinkedIn is very important. It's a professional network. I connected with them. For some, I had to pay for the LinkedIn premium because I couldn't even reach them if I wasn't premium, right? And that's an investment I put in myself, right? To say, you know what, I want to get to Abaz. I need to invest to get to Abaz. So that Abaz doesn't also have a look as, oh, this is just a junk email. He also thinks that for this guy to have this, is perception. For these guys to have this, it seems like he's serious and ready for business, right? There are other networks that you can meet them. You can go to Hangouts, you can go for mixer events and the rest of it. But that's what I did that worked for me. Then I reached out to them. The first person I reached out to was an advisor in Techstar, an advisor in he's been an investor in a multiple of business in Africa. And I was looking for him. I'm like, I need this man on my team, right? So I sent him an email, and then he said, you know what, send me all your documents. I could have said, oh, I want us to sign an NDA, blah, 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 blah. But I knew what I was looking for. Sometimes you don't have to hold on to your ideas so much, so passionately that you feel like, if I send this to this person, I might lose this person. I might lose all that information. This person can go ahead and do this. You have to be able to take a bet on yourself, because your documents sometimes don't necessarily say everything, right? Your document just gives a direction of what it is until they speak to you before they hear certain things that are in your document, right? So I sent it to him, and he said, you know what? He sent me a message back saying, why me? Right? That was text number 2. I had to create why it was him. I had to tell him how many sessions I had been, where he was there, where he spoke, where I thought he aligned with my, so him looking at it now said, oh, okay, I think there's something up to this guy. Maybe I should give him a try, right? And of course, we offered equity to it. Now, you also need to learn how not to offer too many equity, because that affects your cap table in raising. But of course, we limited it to just, you know what, I need just 3 advisory. Let me see what this 3 advisory would do. And then there's a vesting period. That's why you need a legal person as well, right? So the equity is not vesting almost immediately. There's a vesting period of like 2 years or 3 years, depending on how you agree on your terms and conditions with your advisor, so that you are able to see if there's value in that advisor. And if there's no value, you can terminate the contract almost immediately. In 2-3 months, your advisor has not added value to you, then you drop the advisor. It's of no benefit to you, right? And then you pick another advisor. But you should have a pipeline of advisors waiting that you are, checking. You're looking for best, of course, advisor market fits or product fits, or advisor fits. Who fits this business that can take me to the next level? And I don't think that there's nobody that is approachable, right? Everybody's approachable. You have to just find a way to approach them. Abaz, I'll let you take this, because you are also very experienced in this conversation.
Yeah, I think you just answered the question the way it should be answered, right? Everybody is approachable. That's the first mindset we need to have. Everybody, like, there's a way someone actually put it. He said we're like 5% away from whoever on earth. All right. So that's one thing we should know. So if we can actually get to God, right? So that means you can actually get to anyone. So if you have the right network, you can get to anybody at all. So know the right channel to approach them. So for instance, if you are looking for a senior executive, you're not going to go look for them on Instagram. You're not going to look for them on Facebook. You probably may not get their phone number to even get them to talk to them on WhatsApp. Or even if you have their number, there's supposed to be a way you approach them, right? So the best way to get to these people is actually LinkedIn. Most times they're not going to, what's it called? They're of course going to respond to you or send an email, tell them exactly what you want. So that was one of the first ways. So get an advisor, look for who, get a list of the people you think are great fit for what you're doing, or ask people as well. You can ask people, who do you think can be an advisor for us? Some sort of advisor recommendation, right?
Yeah.
And if you talk to someone you think is a great fit and he feels he's not the right person,
ask him for a recommendation.
Ask the person. Yes. Ask for recommendation. It's really simple.
Yeah.
Right? So I think that's the only addition I have from my end. But he did answer, he did make justification for the question. He answered very well.
The other addition I would
Yeah.
just add to it is that you must have some value. Don't go to an advisor if you don't have a value, right?
Mhm.
You must have some value. You must have some results. You must have some. You don't put an advisor at the very beginning of just having an idea. It's very wrong. At that stage, you can get someone to mentor you, right? And just see your idea comes up to life. But when you need an advisor, you need beyond just mentorship. You need mentorship, you need networking, you need the advisor to act like they own a piece of land, in your empire. And so they are part of it. There's a way when somebody owns something, you see the passion burning. In fact, when your advisor is chasing you and saying, Bumi, we've not had a conversation in 2 months. Let's have a call this weekend. You are going to jump on that call because or he says to you, oh, I have an idea, or she says to you, I have an idea. Again, try and balance the gender when you're picking advisories as well. It's also very important to balance the gender. I say this because I see a lot of people tilt towards one particular gender in advisory and not balance it. Sometimes, you might all just be tilted towards the same direction. You want to also balance, how the thought process comes in or plays out in advisory. And again, there's never too much advice. You can actually have advisors that are not, taking anything from you, who just like your personality and that's what it is. If you're able to even sell a deal without giving an advisor zero of your business, that's way better. In fact, go to an advisor who will do that and who will be on calls every other day, and then maybe find a reward or a stipend to, reward the person for their time, because time is money as well. All right.
Thank you so much. It was quite detailed. Thanks, Ayola. Thanks, Abaz.
All right. Any other questions from the audience? I see a lot of people on this call. Angela, Ebuka, Benjamin, Peace, Praise, Saba, Esther, Shegun, Tunji. Any other questions before we call it a day? This has been a very insightful session. And Abaz, thank you once again. Abaz, do you want to just tell us a few things around the other businesses that you work with? I know you do a lot of things around investments, startup advisory, startup, founders connect. That's collaborations with founders, connecting them to partnerships, grants, underwriting, and the rest of it. You just want to talk about some of the things that we should look forward to? How you're reachable, how can they reach you, just some of those things.
Yeah, so thank you so much, Ayula. I really appreciate that. So my company, TechField, what we do, I'm going to speak with regards to TechField now. What we do, our focus is just bridging the market, right? Connecting founders to resources, network, and literally everything you need. So from setting up your business globally, so if you intend to scale globally, so we can help you do that. So we can help fix your launch a business literally anywhere. Currently, we cover the US, we cover Canada, we do the Middle East, that's all the entire Gulf region. And then we also do the EU as well. And yeah, sure, we help you do that. And then the second thing we do is getting founders into Global Accelerator. So if you're looking at joining Global Accelerator, as it means to accessing funding, so sure, we have what we call Global Accelerate. We can help you facilitate that over a certain period. We look for the top accelerator for you that aligns with what you're doing, and then we file the applications on your behalf. We mostly make sure you meet up with the eligibility criteria, and then we do that. Then we have something that has really been getting the attention of the market. That's grant formula. And a lot of persons are quite interested in it. If you're, as much as you're building something impactful, we literally help you get granted. Over an entire 1 year, we draft your grant proposal for a minimum of 20, right? 20 applications over a 1 year period. And then you get granted, we take our commission. That's another thing we do. And yeah, investment readiness as well. So we help with investment readiness. We host multiple events as well. So that's literally what we do. And I think Capital School is something else. I think we already have someone that is interested here. So you should stay tuned. We're launching an investment-focused edtech that's going to be teaching you how to raise fund, the right capital for you, and connecting you directly with who is funding you, right? So for instance, there was a question from Wumi here. She asked about who would be the right founder. So what we're going to be doing at Capital School is bring it together to people from First Bank, GT Bank, all of the investment firms, right? All of the investment firms, venture capital firms as well, and even government agencies. You get to hear exactly from them. They teach you what they need you to do for you to get funded for all of their funding opportunities that are there, including grants and all of that. So stay tuned to that. We are going to announce that real soon. And yes, that's just what we do. We host events as well, technology events as well, and trade events as well. We facilitate global licenses. We're just in the nexus of trade and investment. That's what we do. Thank you.
All right, thank you very much, Abaz, and thank you to everyone who joined the call. I'm thinking that this has been a successful session. No additional comments or feedback or questions. Abaz, I want to say thank you for joining very early. Oh, I see her. Okay, Kata, let's have you.
Okay, so sorry, I want to say that how do we connect with them, most especially as a food processing company? Do they work with companies like ours?
Okay, Abaz, you want to answer that?
What was the question?
As a food processing company, do you work with someone like them?
It depends. What exactly? Do you need access to market? Do you want to sell to more persons? You need your business to be global, or you need finance like funding?
Right.
I'm happy to know what exactly you need.
Right. Kita, what do you need?
Okay, so we need funding. So that funding will help us to scale our operation, and that way we can access more markets.
Oh, perfect. So Mr. Ayula has my email, so he can share that with you. And then we can exchange some email and then get on a meeting.
Okay, I'll look forward to that. Thank you so much.
All right, I will
Thank you,
share
sir.
that with everyone on this call via email when you get in a recap of the session. And of course, if you have any other questions or you need me to broker the conversation with Abaz faster than emails, please reach out to me. My number is everywhere. I'm very accessible. So just reach out to me. I would get Abaz on the next flight to Lagos or anywhere you need to be. To just speak to you. All right, that will be all from my end. It's been a pleasure having you all on this call. At least we've done 2 hours. I think it's getting better with time. At least this session is 2 hours. We've done 2 hours in the last 2 sessions, and now Abaz has also clocked 2 hours rather than 3 hours that we had at the very beginning of our session. Next month will be very insightful. We'll have a lot of people come on calls. I think that from Bumi's perspective and Keita, I would look for someone in MSMEs and SMEs to come speak to you about financing in that aspect. That would do justice to you. We're data-driven at Umbrella, and one thing that we do is to look at the data that we have, from founders, and that's why we always request that people fill forms before they get on the call. Abaz, you actually got the data for this session, that gave you like an insight into who will be on the call, how many founders, how many this and that. Maybe we'll also create rooms on the next form to also look into if they are MSMEs or SMEs, and try to create a session for you particularly. But something of interest would be that we also introduced Umbrella Saturday Special, which is a special edition where we would have people. It's special because one, the time zone is very different for some of these guys. They're based out of the country, and the time zone does not really work. Saturday doesn't really work for them. 10 a.m. is like night. Also special because they're coming to speak to us on very unique perspectives, different from the usual fundraising or capital or investment readiness conversations. They're speaking to us on things that founders should consider, things like mental health, things like insurance, like we did the last session. Very, very unique conversations, and these conversations are driven by data. We see this data everywhere, and you'd all agree that it's been one thing or the other for founders to just try and even run a business in Africa. The infrastructures are not there. We're trying to put the infrastructures in place. There's a lot of insecurity. I'm sure Kita, sometimes you have to worry about your goods moving from one location to the other, food security and the rest of it. So there are a lot of conversations we'll be having. We need to develop, like Abaz said, nobody's going to come develop Africa for us. We need to develop Africa by Africans and for Africans. And that's why, we've also said that we would take these sessions very diligently. I've had to think about reducing it from every Saturday to 2 bi-weekly or this, but I think that we will still stick to what it is to the end of the year and ensure that everyone has a successful raise at the end of the day, and everyone is also able to meet up with their goals as founders. For first-time founders, just keep at it. Grit is also very, very important. Those are some of the things that investors are even looking at: consistency and grit. How consistent have you been? Constantly putting your effort into it and driving results. So that will be my 2 cents. Enjoy your weekend and have a great day.